I'm Charlotte McLeod with investingnews.com, and here today with me is John Feneck, Portfolio Manager and Consultant at Feneck Consulting. Thank you so much for being here. Great to have you.
Great to see you again. Thank you.
Yes, we're checking in. I think it's been about 2 months since we last talked. Of course, the landscape has changed quite a bit in many ways, so we've got a lot to talk about. I thought we start as usual with gold. So it was still, I checked, it was around the 2650 level when we spoke at that time. And since then, we've seen it go past 2,900. Now it's pulled back a little bit. So I think good to start by talking about where you see support and resistance for gold.
Sure. So just summarizing last year when you and I were sitting here 12 months ago, we were talking about 1,900 holding for months and months and months, right? And that was a very positive development. And then we saw gold break above 2,000 and never really looked back. Last year was a tremendous year for the metal. It was up around 28%, I believe. When you and I last talked, right, in 2 months ago, we were saying that over that 2629 level was a pivot move up and we would break 2,700, which we did. And then we have been calling for 3,000 for months, as you know, because the big banks like Citi and Goldman and a lot of others are now on board with this 3,000 gold narrative, which is huge for gold miners. And so right now, sitting at 2870 almost as we record this, I think we take another move at 3,000 here over the next few months. I mean, most banks are calling for 3,000 by, end of September. I think it could happen a lot sooner than that because of, the rhetoric we're seeing out of the U.S. with regards to Fort Knox and just so many developments, I think. I mean, the landscape has never really looked better for gold in history.
Yeah, I remembered how you had talked about those big banks and they're basically all looking for $3,000 gold. So it feels, I think you'd said, strange to kind of be in alignment there. So
right.
Or should we expect for gold, I guess, to overshoot that level?
Absolutely, yeah. I mean, you're not probably going to see resistance until 3150-ish. So a move from, let's say, 2850 to 3150 is pretty substantial in the metal right here. But that would mean an incredible thing for gold mining stocks. We just had earnings, as you know, for some of the big boys over the last 2 weeks. The largest three holdings in GDX, which is the barometer for the sector, I believe, are Newmont, Agnico, and Barrick, right? When you look at the costs that these companies have, there's a metric called all-in sustaining cost per ounce, right? AISC. AISC in Newmont was around 1620, not wonderful, but down from their previous quarter. They're the highest of the three. Then you go to Barrick, you're at 1450, and then you go down to Agnico, AEM, and they're at 1316 an ounce. So regardless if you're at 1316 on the low end or 1620 on the high end, gold's at 2850. I mean, the free cash flow that's going to be generated by these companies is huge. You can see it in the earnings. If you don't know how to read an earnings report, I would suggest, working with someone like myself or ask your financial advisor. Like, you need to understand how big this is because these stocks are still trading really poorly versus the market. So there's a great opportunity.
Yeah. And I have to imagine that will soon start to get that broader recognition. Do you see that kicking in soon at some point?
Well, I've been talking about this for over a decade. When I was at Sprott, I said, what would happen if we had more representation in the major indices like the S&P or the NASDAQ? And, we're a fractional part of the NASDAQ, but we're literally 0.1% of the S&P. It's one stock out of 500. It's Newmont, right? So why wouldn't we see Alamos or Agnico or some of these other stocks that are really doing well be included in a hotter gold market? I think it's possible. And so creating more awareness about our sector is important. And that's what I try to do with my followers and clients is just try to tell them, hey, look, gold is not broken. Going from, like little under 3,000 to 2,850, this is just a breather in a long-term trend. So I would encourage people to look at a 15 to 20-year chart of gold. It looks very constructive.
Yeah, maybe you can say a little bit more about that. Is it kind of that gold as an industry has a bit of a marketing problem?
Yep, absolutely. I know a lot of CEOs that are geologists by trade and have no clue how to get to clients like mine. It's not me bragging about that. It's me literally turning down more clients that I take on. We probably had 60 inquiries in January, and I took on 5 new clients because most of the clients that come to me, Charlotte, are like Bitcoin guys, bros, technology people. They're like, hey, what, I need 100%. It's not happening. Like you and I both know this is a hard industry and you have to be patient, and most people aren't patient. So we're trying to find these really good clients that are higher net worth, that are patient investors that see the ride for the next 1 to 3 years. I mean, it's going to be a really good run here in gold and silver stocks if you're willing to be patient.
Yeah, and interesting to see how you select for people who can understand that. Okay, so gold looking good. I want to make sure to check in with you on the Fed. And I was telling you before we turned the camera on, I am allowing it maybe for myself to get overshadowed by all of these other interesting things in the gold market, but we got to check in on that. So sure. You told us previously you're expecting more than 2 cuts in 2025. Is that still your call?
Yeah, so right now as we speak, the Fed is factoring in 2 cuts. If you remember back in November, around the time of the election, it was 3 or 4. But that got pulled back for sure in the December meeting. And the market kind of didn't like that, but to be frank, has been quite resilient, the broad market. So I think a scenario where we see 3 cuts is very possible. If you look at the ISM manufacturing number, which just came out a few hours ago, very inflationary. The employment piece of that, meaning the labor piece of that, very poor. So what is the Fed looking for? A stable labor market, lower inflation. These are both not what happened just 3 hours ago. So the Fed is going to have to act more. And I'll just give your listeners kind of the rundown here for March, right? So economically, we're looking at non-farm payrolls on March 7th. That's always a big number to me in mining and metals. The estimate's 133,000 new jobs. March 12th is CPI. I'm literally at my computer every CPI morning, never traveling, never doing anything like this, because it is important. And then March 19th, we have the Fed. The Fed is less important from a decision-making process this time because the Fed is a 5% probability of any type of move. So it's going to be like one of those meetings where it's more about what Powell is saying than the actual decision.
Yeah. Always interesting to try to parse through those statements and figure out what they really mean. So, okay, that gives us an idea, I think, of what to be looking out for here. I wonder if we can take a look over and get some updates on the gold companies that you're focusing on.
Sure. So there's a lot of good value in gold stocks right now. I'll try to rattle off a few without going into too much detail. I just met with NeXGold's CEO, Kevin Bullock, down at BMO in Florida. The stock's at 42 cents US. The ticker is NXGCF, NEXG in Canada. And both Kevin and I are perplexed as to why the stock is doing what it's doing. I can't verify there's naked short interest on it, meaning short selling. But I would say that it doesn't seem logical that you see a stock go from 50 cents to 42 cents on no bad news. And they've just completed a merger which gets them to 7 million ounces of gold. This is not like a 1 million ounce deposit or something. This is 7 million ounces. And it's run by a company, Charlotte, that's able to pivot into one project or the other now, which I think most investors are missing. Because when they were just originally Treasury Metals, then NeXGold, the Signal NeXGold merger let them, in December be able to move into one or the other, which gives them flexibility, which I like. I have to say, I think, gosh, there's so many in my brain right now. I'd say, one that doesn't get much notoriety at all is 1911 gold. That's AUMBF, AUMB in Canada. I've known Sean for about 2 years now, and I was just intrigued when I look at long-term charts. I like to go back and look at 2011, 2012 as a proxy for how certain gold stocks did then. And this stock had $1 billion market cap back then, and now the market cap is under 20 million. So that it doesn't imply that we're getting back to $1 billion, right? But it does imply that 20 million is way too low. $1 billion was probably way too high. So somewhere in the middle would mean that you're making hundreds of percent on a stock. I'm not suggesting that's going to happen, but when you look at the production that company could put up, it's a high-grade deposit. They're only a couple of years away from production. So this isn't one of those juniors where you have to wait 7 or 8 years to get production. So we like that. Let me think of one more. So yeah, US Gold in the US. USAU is the ticker on the NASDAQ. No Canadian ticker, but I just saw they picked up some Canadian analyst coverage. So it's possible that they're going to launch a Canadian ticker this year. But probably the best name in mining, US Gold. I mean, in a Trump world, this is in Wyoming, permitted as of November. So maybe we didn't talk about it since we last met. But that permitting took the stock from $6 up to $8.50. It then came back into the sixes and is now back in the eights. So it's firmly bottomed, I think, between $5 and $6. And now the upside is high, in my opinion, because they only have 12.2 million shares out. So when you see a stock like that on a good exchange with a good name in a great state, fully permitted, run by a guy, George B., who I think honestly could put it into production because he's done this in South America, Central America, in much more challenging places than Wyoming.
Okay, that's a good run through, I think, of those 3 companies. And as usual, we'll put the names and the tickers in the video description so people can know about them. One small follow-up question. You mentioned looking at this company and wondering if there's short selling going on there, and it's hard to tell. And it seems like it's a pretty pervasive issue that maybe people aren't aware of, and they do have that confusion. Anything you would add there on how you navigate when you see that possibly happening?
Yeah, I'd love to talk about that for a minute. I think it's really important for listeners and clients to understand how this works. First thing I would mention is go to savecanadianmining.com. It's a free website. Clients can go there, CEOs can go there, and join the fight against these entities that try to make our lives difficult on a daily basis. I mean, I don't mind short selling. I do mind naked short selling because you don't know who's doing what, and they're doing it with shares that don't even exist. There's a company right now that I was just buying on Friday called American Tungsten. It's DEMRF in the US and TUNG in Canada. I'm meeting with the CEO for the first time tomorrow here at the conference, and the stock's just getting pummeled by shorts. I can see it. If you look at stockwatch.com, which is a good free website as well, you can see these anonymous, number 79, Morgan Stanley. Wait, Morgan Stanley can't even buy the stock because it's not even a price that they can buy the stock at. So how are these people selling shares, right? It's like a lot of weird stuff going on the tape in that stock. So I love to out short sellers in our sector because it's challenging enough to buy mining stocks, right? So you don't need this extra stress. So I would suggest go to Save Canadian Mining. Terry Lynch, the CEO of Power Nickel, PNPNF in the States, PNPN in Canada, has done a tremendous job with making people aware of these entities and the problems that exist. And by the way, Terry and I talked about this last year here at PDEC in March, sitting right there. And we said we have to do something about these short sellers because they were swarming his stock. And we did a couple of presentations together. I interviewed him. And somewhere in that, viewership, the stock just took off. And then they hit some really good drill holes. And the stock now just did a $40 million financing, bringing in people like Rob McEwen and Robert Friedland. So the moral of the story is Terry's sitting there at 16 cents last year. Stock's at $1.10 right now. I mean, it's just good for you, Terry. Let's extinguish more of these people that are not supportive of our sector.
Yeah, I think that's a good overview, and also encourage people to go check out the Save Canadian Mining website. It's probably time for me to do an update with Terry. I've talked about it to him in the past, but not for a little while.
Not sure where, right?
Okay, we'll go look for him later. Okay, so that is, we've covered a bit on the gold side there. You started to mention tungsten, and I think that's a good transition into critical minerals.
Sure.
We usually spend some time talking about your special situation type of companies. And I think it's pretty relevant right now because we've got all this tariff and trade war situation happening, very fluid right now, but it has highlighted the need for critical minerals. So anything you would talk about there?
Yeah. So we've been talking about tungsten for almost 2 years now because a CEO brought to my attention that 81% of it was produced in China in 2023. And then I looked at who else was producing it, and it was like companies that aren't necessarily allies to the U.S., right? Like Russia, right? So when you add up the number, it's about 91% of tungsten produced globally in places that are not the U.S. or are not friendly to the U.S. The U.S. produced 0% of tungsten in 2023 and 2024. So I've been focusing on North American tungsten companies because of the following. You saw at the huge meeting last week in Europe that almost every PM or minister, or you name the head of that country, they were all talking about increasing defense spending, right? This is a major trend because they're seeing the need for protection in a protectionist kind of world, I think. And part of that is tungsten, believe it or not, because it is in tanks, it's in missiles, it's in body armor, it's in bullets. So how do you get it as the U.S.? You have to figure stuff out. And that's why I liked American Tungsten that I just mentioned, DEMRF, because, you know, this is a company that is in Idaho and they're a past producer. And I'm excited to meet Murray tomorrow to learn more about the company. But the other one that I've talked about on your show before was Guardian Metal Resources, GMTLF in the States and GMET.L in London. They don't have a Canadian ticker. But Oliver's a really sharp young CEO. He is going to get it done there. When I look at who's coming into the product, it's a billionaire. It's a New York City mutual fund that I know. It's like people that aren't going to sell, right? So like you want to build a share structure with people that see the long game, like me. You know, we haven't sold a share of that stock since I met him in 2023. We bought it first around 16, 17 cents. It's trading at 41 cents right now. I think it's going to test the high from last year, which was 52.5, and probably break through that this year because there's a lot happening there. They picked up a second project in Nevada recently. So Guardian Metal in Nevada, American Tungsten in Idaho. I just talked to Almonty Resources for the first time last week. We're supposed to meet here at the conference. And Fireweed is in Canada, right? So that's FWEDF. They got a $35 million grant just in December. So I'm not sure I mentioned that on your show last time. But $35 million in a form of a grant is huge for investors because it's not dilutive to us, right? So I see more of these kind of grants being handed out. And I think companies like Guardian, American Tungsten, I just met with Stillwater Critical here, which is PGEZF in the States, PGE in Canada. They're talking to their congressman in Montana. They just flew him over the project in a helicopter. Montana is a great state. There's going to be a lot of good things happening in these U.S. states like Nevada, Montana, Wyoming, Idaho. I mean, it's just that kind of a year where Trump is going to bring more awareness to investors about the need for critical minerals in North America.
Yeah, I certainly we're starting to see that. And one small follow-up on the critical minerals angle. So it's an umbrella that covers a lot of different things, and I think maybe it can get confusing on which to pursue. Should investors aim for those maybe more defense-focused critical minerals right now? Is that maybe the move?
I think so.
Yes. Okay.
I grew up in a military household, so I know right now where we're at in the world is not as good of a place as people think. I think, you know, you have to be able to look at metals like tungsten or antimony and different things and say, this has got to be a part of my portfolio. And how do I play that? Well, you can't buy an ETF that tracks tungsten price or antimony price. You can in gold, silver, copper, etc., right? So the way to play it is through equities. The antimony play we're seeing here at the conference is Mandalay Resources, MNDJF in the States, and MND in Canada, I believe. A lot of information from flying in at 2 o'clock in the morning last night. But Mandalay has $76 million in cash and no debt, and they have a producing antimony project, which I like a lot. So I'm excited to meet them tomorrow.
Okay, very good. Well, I will let you go. I momentarily forgot that you're running, I think, on very little sleep. So I think a good look at everything despite that. So any final thoughts you would leave investors with?
Yeah, this is the time right now to get invested. I said that probably last PDAC, but I mean, anyone who's been doing this for 12 to 18 months has had a pretty good experience, I would imagine. You know, we were up 26% almost last year in a market where GDX was up 10.17. So we're grinding every day, trying to find, you know, performance out there for our clients. And we hope people will contact us. One last thing, if you don't mind. I just got back from Florida. That's where I flew in from. And I was down there for BMO and meeting hedge funds and private equity products. And we're going to have an awesome conference down there again at the Four Seasons Fort Lauderdale, May 11th through the 13th. Right after that this year, we're flying right to Atlanta and doing Buckhead, May 14th through the 16th. So we're going to have 2 great U.S.-based conferences, and we hope people will reach out to us and learn more, because we want to have clients there and hopefully get something out of it.
Okay, very good. So we will mark our calendars for those ones, and for now, I'll release you back onto the floor of PDAC. Thank you so much for being here.
Thanks a lot, Charlotte. Good.
And once again, I'm Charlotte McLeod with investingnews.com, and this is John Feneck with Feneck Consulting.